Good evening and thank you for joining us on India Business Hour. I'm Parkshit Luthra and here are the headlines we are tracking.
Given the uncertainties, we need to maintain Arjuna's eye on the evolving inflation scenario.
RBI Governor says the goal is to bring inflation down to 4% as the Monetary Policy Committee announces a status quo policy, maintains a stance at withdrawal of accommodation. The unexpectedly hawkish policy deals a blow to rate cut hopes. India's top bankers are divided on the possibility of a rate cut in 2023. About 50% of the 2,000 rupee notes in circulation have returned to banks, says the RBI governor. This amounts to 1.8 lakh crore rupees. Around 85% of these notes returned in the form of deposits. Financial stocks slide after RBI's status quo policy. Sensex and Nifty decline 0.5%, snapping a 4-day winning streak. 10-year bond yields spike, breaching 7%. The government is likely to nudge oil marketing companies to cut fuel prices as they are close to normalcy on under-recovery. Sources tell CNBC-TV18 that oil marketing companies can pass on some benefits to consumers within the bounds of legitimacy. In his first interview since taking charge, Moto CEO Govt says the board wants him to shift gears and win in new segments like premium bikes and electric vehicles, as that the recent VRS scheme will enable a talent refreshment at MotoCorp.
We being the leading steel company in India, we just to keep our market share, we at least will have to double our growth, double our capacity from today.
JSW Group boss Arjun Jindal says that they are looking to almost double their steel capacity to 50 million tons by 2030. Jindal tells CNBC-TV18 that the government has projected need for 250 million tons in the next 7 years. Adds JSW, as the leading steel maker, will have to double growth to keep their market share. JSW Steel stock spikes over 4% in trade. The Met Department confirms the onset of monsoon over Kerala, declares an orange alert in Kozhikode and a yellow alert in several districts. Heavy rainfall reported across different weather stations in the state. An apocalyptic sky and a blanket of thick smog engulfs New York City and large parts of the U.S. East Coast after wildfires in Canada. Flight services disrupted. New York mayor urges residents to stay indoors and schools suspend outdoor activities. Thousands evacuate their homes in Canada. Football icon Lionel Messi picks United States over Saudi Arabia, set to join David Beckham's Major League Soccer side Inter Miami. Financial details yet to be disclosed, but Messi is likely to share profits from the American League's deals with Adidas and Apple. But first, the big story this evening. The Reserve Bank's Monetary Policy Committee announced a status quo policy in what was a largely expected move. But what was unexpected was the hawkish tone on inflation. Before we get to that, here are the key highlights. The MPC unanimously decided to keep the repo rate unchanged at 6.5%. It maintained the stance on withdrawal of accommodation with 5 members in agreement and only Jayant Verma casting a dissenting vote. Citing robust domestic demand, the RBI maintained its growth forecast for FY24 at 6.5%. It raised the growth forecast for Q1 to 8% and Q2 to 6.5%. Meanwhile, the estimate for FY24 inflation has been lowered to 5.1%. Governor Das said the inflation remains within the target range. He asserted that there will be no compromise on the 4% target. And finally, the governor said about 50% of the 2,000 rupee notes having returned to the banking system. So far, this amounts to 1.8 lakh crore rupees. Around 85% of these notes have returned in the form of deposits, proving an additional liquidity cushion for banks.
Given the uncertainties, we need to maintain Arjuna's eye on the evolving inflation scenario. Let me re-emphasize that headline inflation still remains above the target, and being within the tolerance band is not enough. Our goal is to achieve the target of 4% going forward. As Mahatma Gandhi had said, the ideal must not be lowered. The continuation of stance of withdrawal of accommodation should be seen from this perspective.
Totally so far, about 1,80,000 crores, 1.8 lakh crores of 2,000 rupee notes have come back. And this is roughly about 50% of the 2,000 notes which were in circulation on 31st March. About 85% of the 2,000 rupee notes are coming back as deposits into bank accounts. Going forward, I would, through you, appeal to everyone not to rush or not to go to the bank in a panic.
Meanwhile, market failed to hold intraday recovery to snap its 4-day winning streak. Nifty and Sensex fell 0.5%. Midcaps fell in line with blue chips. Financials underperformed after the RBI status quo policy. 10-year bond yields spiked after the policy breaching 7%. Latha Venkatesh is here with her take on monetary policy.
Yes, so to speak, it was an as-expected policy after the CNBC-TV18 poll and the Citizens MPC had voted for no rate action and no change in stance, and that's how it was. But there was a twist in the talk. There were minor hopes that even if the withdrawal of accommodation stance is maintained, somewhere it would be softened. That hope was dashed. But more specifically, there were some clearly hawkish signals. One was the inflation estimate. The forecast was expected to be toned down from 5.2% to probably 4.8 or 4.9. Reserve Bank has brought it down only 10 basis to 5.1. Now, that's a bit of a shock, indicating that the Reserve Bank doesn't see the momentum of declining inflation to continue. At least it's not admitting to it. The other slightly hawkish signal is the repeated insistence that we are not happy if we just bring inflation to 4 to 6%. That's the tolerance band. But the mandated target given to the MPC is 4%. We want to align CPI to that given target. This was repeated by the governor several times. And whenever they, when people ask them that there have been some banks that have cut rates, yields have fallen sometimes below repo rate, the governor and the deputy governor said that's why we came and absorbed liquidity when we saw these signs. So clearly they are uncomfortable if yields fall. That's the message they wanted to give. The only dovish statement seemed to be that we don't want to see CPI at 4%, but aligned to the 4% target. So there was a little bit of a hope that maybe the stance could change a little earlier, probably in October, when the monetary policy report comes out. The Reserve Bank could forecast the next year's inflation at 4 point something. And maybe at that time they could soften their stance, we don't know. But the short message for all of us as consumers and bankers and bond dealers is no rate cut, not in this calendar, but perhaps not even in this fiscal year.
All right. Thank you very much, Latha, for joining us. The unexpectedly hawkish policy deals a blow to rate cut hopes. India's top bankers are divided on the possibility of a rate cut in 2023.
Mr. Khara, would you agree this is a slightly hawkish surprise?
The way I look at it is, yes, of course, stance is something, and also the expectation in terms of inflation. What you mentioned that we were expecting much lower expectation of inflation. Well, if you evaluate on those terms, yes, perhaps yes. But the fact of the matter is that there are various uncertainties which are still there in the system. That is why perhaps this kind of a announcement has come from RBI.
I want to understand from you, do you take away from the commentary a more hawkish stance than the market was expecting?
Yeah, I would say so. But having said that, it all depends on how the monsoon is. And if we see a good monsoon, then clearly we'll see a little bit of the food inflation, etc., coming off. And hopefully, yeah, then we might see one rate cut by December.
One rate cut by December. So you're in the camp that believes we're likely to see still the possibility of a rate cut in this calendar year. Kaushik?
I think coming out quite clearly, at least the way we see it now, is that the MPC will need to come with a couple of cases where they will probably talk about liquidity to be controlled and let go, to give a sign to the market before they do the rate cut. So I think we will, I'm probably in the camp, like Mr. Tiwari said, probably the financial year, not the calendar year, could even slip into April.
Could even slip into April. Yes, some of our respondents to our poll do seem to suggest that as well. Mr. Kumar, what's your expectation?
Well, I think instead of, say, a rate cut, what we need to see how, when the situation is going to improve at the ground. And situation at the ground would be more in terms of the inflation, because they are not going to compromise in terms of inflation going up and there would be rate cut. So I think as long as the inflation would remain elevated, we don't see any possibility of the rate cut. And the inflation would be definitely dependent this time on the monsoon, but also in terms of the supply chain. What happens in the international, say, markets. And if there are, say, recession around the world, if the demands would be low, and there would be issues in terms of raw material prices, and if the inflation is not coming down, I think we don't see the rates cuts coming. So at least not in this calendar year, but hopefully if it starts happening in the financial year, I think that would be very good.
And the government expects oil marketing companies to reduce fuel prices. Sources say that expectations come on the back of health of OMCs being close to normalcy on under-recoveries, although companies like HPCL booked a net loss of almost 9,000 crore rupees in FY23. Sapna Das joins us. Sapna, tell us what are you picking up?
Well, government sources are of the view that oil marketing companies, their financial health is slowly inching back to normalcy, or they are close to normalcy. It could just be possible that most of the petrol and diesel under recoveries, that situation may not be there completely, so to speak. Of course, some bit will always remain, but there could be some scope within legitimate bounds for them to pass on some benefit to the common man, to the common consumer. The government's aim always, of course, has been to maintain stable fuel prices, with a downward trend. So this could be a kind of a soft nudge to OMCs to explore the possibility of a fuel price cut. From the OMCs perspective, I think a couple of things that we need to keep in mind. FY23 was a rough year for them, though of course governments also expect the ongoing current quarter also to be a good one on the back of a good Q4. So some of the companies are still not out of the woods. HPCL reported a net loss in FY23, so that could be one factor to keep in mind. Apart from that, importantly, the rupee-dollar exchange rate and the Saudi announcement of a production cut. These two factors are going to be important as far as pricing decisions are concerned. There is no response yet from the OMCs on this front, so I think we have to keep an eye out on that. But the government, in the meanwhile, from its end, their messaging is quite unequivocal at this point in time.
And speaking of fuel price cut, brokerage firm Morgan Stanley said oil marketing companies are on track to recover their losses and current fuel prices can offer a buffer of 2 to 5% price cut. The Indian Met Department has confirmed that Kerala has received its first spell of rain after a week of delay. Earlier, the IMD predicted that cyclone Biparjoy had affected the monsoon's intensity and that the onset over Kerala would be mild. A yellow alert has been issued in parts of Kerala coast. On to the newsmaker of the day. In his first interview since taking charge, Hero Moto CEO Niranjan Gupta has said that the board expects him to shift gears and focus on performance of new segments like premium bikes and electric vehicles. In a conversation with me, Gupta said that 10% of their employees have taken voluntary retirement. He added that every company needs to go through a talent churn to make space for the future.
From time to time, every company has to go through refreshing, talent churn in order to ensure that the talent is future ready and future fit. Overall, around 10% of the staff took the VRS, and that paves the way for the future in terms of building the organization, much simpler organization, de-layered, simplified, which will ensure that the speed at which we move will be much faster than what we have been doing. Given the framework of EV that's changing rapidly, whether it's in terms of customer, whether it's in terms of regulatory, or the battery side, the cost side, or the fame that everyone is aware of, I can only say that don't go by the current leadership in the market. It's going to change dramatically over the next 3 years. And typically we have given the guidance of between 1,000 to 1,500 crores a year. That's the range of capex guidance. So therefore more and more investment out of this pie will be towards an EV and premium.
All right, EV premium will be the focus of Hero MotoCorp going forward. Moving on, we're going to take a short break, but up next, global football icon Lionel Messi has confirmed plans to join David Beckham's American Major League Soccer side Inter Miami. A special report on why this deal could be one of a kind when we're back. JSW Group boss Arjun Jindal has said that they are looking to almost double steel capacity to 50 million tons by 2030. Speaking to CNBC-TV18 from Monte Carlo, Jindal said that the government has projected a need for 250 million tons in the next 7 years. He said JSW, as a leading steel maker, will have to double growth to keep their market share.
Right now we are at 28 million tons, and our idea is to go over 50 million tons by 2030, which means that we will be increasing our capacity by 40%, if not 50%, or if doubling, at least 40%. That means 23 million tons capacity we will be adding. The thumb rule in steel industry is that for every million tons, you have to invest at least $1 billion, if not more. So therefore, we are talking about close to $25 billion in the next 7 years.
All right, MG Motor India has said it has received an order for 500 ZS electric sports utility vehicles from ride-hailing service Blue Spot. The car offers a range of over 450 kilometers in a single charge, which Blue Spot plans to make available for last-mile mobility. SpiceJet has partnered with FTAI Aviation for fleet revitalization. The airline said FTAI Aviation will provide up to 20 engines for lease and will reduce maintenance expenses for the airline. The low-cost carrier said that the first few engines will be used to support the reactivation of airlines' aircraft fleet over the next 2 to 3 months. Crisis hit Go First has extended its flight cancellations from the 9th of June to the 12th of June, citing operational reasons. The airline, which had filed for insolvency proceedings, hasn't flown planes since the 2nd of May. Go First said it will issue a full refund to passengers. And staying with aviation, an Air India ferry flight that was moved from Mumbai to pick up passengers stranded for nearly 2 days in Russia has landed safely in San Francisco. The flight, which took off from Delhi with 216 passengers and 16 crew members, was diverted to Russia after a technical issue with one of its engines. The airline has said that passengers will get a full refund as well as a voucher for future travel on the airline. Wildfires continue to rage in Quebec and other Miami calling Messi. With that, it's a wrap on this edition of India Business Hour. Thank you for watching. News continues right here on CNBC TV18.